Hello everyone, today is a continuation of my series on investing. Particularly, we're going to talk about the different types of ways that companies raise funds from shareholders. Now, I did a recent video on share placings. This video is all about open offer subscriptions. So what is an open offer? So this is when a company goes to the existing shareholders and offers them the right to buy new shares in the company. Now, often at a discount to the current market value of the shares. So let's take an example. Let's say you own 400 shares in a company and assume that the company then announces an open offer to subscribe for one new share for every 5 that you hold. So in this scenario, you hold 400, you could buy 80 new shares, and that is what is called the open offer. Now, let's say that that example, the 1 for 5, that is called your basic entitlement, and it's a guaranteed offer, cannot be scaled back. So let's take an example. Let's say the offer is to buy each of these shares at £1.20, where the market value would have been £2. So that's quite a big discount. So in this scenario, you could buy 80 new shares for £96, which is a discount of £64, because the market value is £2, but you're getting each one for £1.20, and 80 is the amount that you can get as part of your basic entitlement. So a real life example of this, let's take a real life. This happened in May 2021, and this was Revolution Bars, a company that's reasonably well known, listed on the stock market, and they announced an open offer basically to help with expansion, to fund expansion of the business post-pandemic after everything opens up. And they announced on their open offer the right to buy 1 share for every 25 shares owned. So existing shareholders had the right to buy 1 share for every 25 shares already owned, and at the price of 20 pence per share, which at the time was a 41% discount to the market value of a share at that date of the open offer. So these things are a way for existing shareholders to get additional shares, often at a discount, a lot easier to access for the retail investors, i.e. the likes of you and I, not necessarily the big pension funds or the fund managers, but retail investors, you and I, with some shares. Open offers, a lot easier to access, unlike, say, with the share placings, which I discussed in the last video, where, yes, there are certain avenues, but it's quite tricky to access a deal, a discount share via a share placing. But certainly with open offers, it is a lot easier. So not to be confused with a rights issue, and I'll do a separate video on a rights issue, but terminology important here. This is all about an open offer. Even though an open offer gives the right to buy new shares, often at a discount, for existing shareholders, it is different to a so-called rights issue. And I'll do a separate video on that. But this was just a quick overview on raising funds via an open offer. And if you like this video, please do subscribe right there, and I'll see you soon.